Hi, I'm Raymond Tan. I'm a Manhattan condo broker and I focus on investors from all over the world buying Manhattan condos as an investment. This is our August Manhattan market update, and the opening slide here are examples of our clients' investments. The one on the left here is a pre-war condo, and the key things here are A, the high ceilings, and B, the dramatic views. Notice that there's a lot of blue sky, which is rare in Manhattan in terms of a view. In Manhattan, usually you stare out at a building that is next to your building. So this apartment rented out in 1 week. The one in the middle here is actually the terrace of my client's former apartment. We bought it during the great financial crisis and sold it a few years later. The key thing here is the terrace. The terrace actually refers to where the building has a setback. So if you can imagine, the building narrows, and where the narrowing part is where the terrace is. Usually outdoor spaces are balconies, and a balcony is just a platform that juts out, but a terrace is a lot more rare. This is a 500 square feet terrace and it has great views. This is the Frank Gehry building. This building is at 99 John Street. It's an Art Deco pre-war building. The one on the right here is our client's apartment that just closed last week, and it's a 3-bedroom apartment. We targeted larger apartments because we know of the need that renters have for larger apartments as a result of the pandemic. People have been working from home for more than a year, and right now everyone wants more space. So the demand for larger 3-bedroom apartments is actually quite high, and we have a lot of interest after having listed it on the rental market for about 3 days right now. Let's move on. The August Manhattan market update. These are the 3 key points. Number 1, we have very tight supply. And in representing buyers, that's a bit of a challenge, but that's the state of the market. Very tight supply. Number 2, we have very low interest rates, historically low interest rates. Right now a 30-year fix is roughly about 2.75%. Back in the 1980s it was 16%. So you can see right now we are really at historical lows, and this is why buyers are all coming in to lock in the low interest rates, because inflation is going up, so interest rates are expected to go up. And number 3, are we in the bubble? The rest of the country, the real estate market is so hot, and there's a lot of questions about whether the rest of the country is in a bubble. Maybe yes, but for Manhattan, I don't think we're in a bubble, because the prior peak was in 2017. For condos it was around 2,200 per square foot, and right now we are still lower than the 2017 price per square foot. There's a lot of sales volume, a lot of sales activity, but prices are still lower than the prior peak. So Manhattan is not in a bubble. This is a new development table. The key thing to note is the number of sales, and this is consistent with the overall market, where there's a large increase in sales volume compared to last quarter, first quarter, and compared to last year, which was second quarter of 2020. So huge jump in number of sales, and some of the key stats are average price per square foot for a new development is 2,600. The overall market is 1,900. So you can see new developments are more expensive, understandably, and prices are still lower than a year ago. The average sales price for a new development apartment is 3.8 million. For the overall market is 2.6 million, and here you can see the price is still 10% lower than compared to a year ago. This is the supply chart courtesy of UrbanDix, which is a great data analytics firm, and supply has been decreasing. What does that mean? It means that as a buyer there's not that much to choose from, and right now it's a seller's market. Manhattan pending sales, this refers to contracts in pipeline waiting to close. The bottom was in July of 2020. That was the bottom of the pandemic market, and it's been increasing every week until very recently. Maybe this was around July, the beginning of July. when it started coming down a bit. So there's some stabilization, which is good from a buyer's perspective. But since March of this year, it's been a seller's market. Why? Because the demand exceeds supply. From the prior chart, you can see supply has been decreasing. This is a comparison of carrying costs. If you were to rent an apartment, which is the blue line, if you were to own a co-op, which is the red line, and if you were to own a condo, which is the yellow line. So if you own a condo, the carrying cost would be the mortgage, and this chart assumes 80% mortgage. There's the common charges and the property taxes. And if you own a co-op, then the carrying cost would be the mortgage and the maintenance, and if you rent, it's just the monthly rent. So in Manhattan, the cost of owning is always higher than the cost of renting. Why do people still own? It's because owners benefit from the appreciation and renters do not benefit from the appreciation. You can see that the gap here is still quite narrow. The narrowest was here. That was the bottom of the market when prices were the lowest as far as this cycle goes. And this was around July of last year. And right now it's still quite narrow. During the prior peak around 2017, 2018, you see the gap was larger because the prices were more expensive, and the cost of renting has been about the same. The key difference is the cost of owning, right? So this is courtesy of UrbanDix, and it shows that the gap is still quite good, even relative to the bottom of the market. And this is a brief bio of myself. I focus on Manhattan condominiums. I'm an ex-Citi banker, manage a $500 million portfolio. Back then, I was at Citibank for about 10 years. Did my business school at Illinois. Have been living in Manhattan since 1999, and I do a lot of fitness stuff, boot camp style workouts, and Muay Thai kickboxing. Thank you for watching.